the last thing I'd like to just spend a few minutes on is the area of foreign currency, and what I will, I think, attempt to do here is to attempt to just, let's say, draw a picture, not to go through any of the rules, but rather to just say, to make sure, in a sense, you have an idea of why this is a relevant subject. Now, again, you're not likely to, in your future careers, be doing the calculations. But you need to understand where there may be a need to do calculations, where there may be a need to understand generally what companies have done when they translated things or they calculated profits here and there. You need to know enough in order to ask the questions as to whether they have done things in a sense properly, or whether there may be big exposures because they followed some other rules. So it's not so much knowing what the rules are, rather it's recognizing where there are situations where, gee, these rules might be relevant. With that in mind, let's just sort of draw a quick picture. If you have a U.S. taxpayer, let's just say this is a U.S. corporation, that U.S. corporation occasionally buys property. It buys inventory, it buys fixed assets, could buy any particular thing. Now, we live in a big country where everybody uses the U.S. dollar. If we go down to a store, we pay with U.S. dollars. If we charge something, it's to our credit card, it's charged in U.S. dollars. We have a big country, and we live in this environment. But a corporation that's doing business in various places, buying and selling things, that sometimes buying from persons in foreign countries, sometimes selling to persons in foreign countries. It's purely a business negotiated matter as to whether we denominate the purchase price of what we purchase or the selling price of what we sell in dollars, in Deutschmarks, in Hong Kong dollars, in euros, whatever it is. Now, of course, Deutschmarks was a bad example because Deutschmark doesn't exist any longer. But anyway, the point is that it is a negotiated fact as to what the two parties agree as to what currency a purchase or sale or other transaction will be denominated in. Okay. So if this U.S. corporation buys this table from a supplier in Hong Kong, and the agreement they make is to buy it in Hong Kong dollars, to denominate, I shouldn't say buy it, to denominate the purchase price in Hong Kong dollars, payable, for example, let's say 1 month after delivery of the table. Well, how do we record that? Because this U.S. company keeps its books and records in dollars. I can't put into my U.S. dollar accounting records that I use for tax purposes. I can't put in that I paid 100 Hong Kong dollars. I need to put in a US dollar amount. I'm going to depreciate it over 5 years, let's say. What's the basis for depreciation? Well, yeah, there's, okay, some rules. Yeah, generally, yeah, I'm going to, the date that I buy it, I'm going to have to put it on my books at the spot rate at that date. Now, that's a rule. But generally, the issue is that I put it on my books at one day, but I'm going to pay for it a month later. Exchange rates might move. So what do I do with that difference? If I put this on my books when, this isn't of course true, but let's say it was 1 Hong Kong dollar to 1 US dollar. If I put this table on my books at the date I actually buy it at $100 because I paid 100 Hong Kong dollars, but because I'm obligated to pay 100 Hong Kong dollars. But a month later, the exchange rate has changed, and the 100 Hong Kong dollars that I pay in a month, at that date, that's worth 105 US dollars. But what about that 5 difference? Okay, there's rules telling us what to do with that 5 difference. You can have, let's say the US company says, gee, I'm worried that the US dollar may fall in value. And of course, if the US dollar falls in value, then it's going to cost me effectively maybe 105 instead of 100 US dollars in terms of value in order to buy this table. Well, that's where the concept of hedging comes in. I, the US company, well, I want to lock in my $100 price today. I want to make sure that it doesn't cost me because the US dollar goes down in value. I don't want it to cost me an extra 5 or 10 or 15 because, of course, there's no control on what happens with exchange rates. So to get into a financial transaction, whether it's a forward, whether it's some sort of option, what have you, in which I economically lock in my US dollar price for those 100 Hong Kong dollars that I'm going to have to pay in a month. That's hedging. Now, there's usually a cost to hedging. Maybe I have to pay $101 US dollars today for the right to have for the right to have 100 Hong Kong dollars of value in 30 days. So there's special hedge accounting as to how to deal with these kinds of situations. The point is, understand that when a U.S. company buys something, when it sells something, it's going to have to somehow translate things into dollars. And these various rules, 985 through 989, cover these kinds of things. There's, again, just very broadly speaking, if a U.S. company has a branch, how does that branch calculate its income and expenses? And what currency does it use? That's an issue. Foreign subsidiary, it's going to have to calculate earnings and profits. What currency does it use? That's an issue. When foreign taxes are paid, you're going to eventually have a U.S. credit for it, whether it's a directly paid tax or a deemed paid credit. How do you translate foreign taxes into U.S. dollars? So these are the kinds of issues that are there. The slides, which again hopefully are a reference for you, go into this a little bit, but not in great detail. Hopefully it'll just give you a little bit of a taste for it.